investments question that we're answering today has to do with savings. In particular, we want to shed some light on the difference between savings and CDs and why is it important to go with a FDIC insured bank. First, let's start with savings. The basic idea of savings is that we put money in the bank and we save money when we need them. Most of the time, savings accounts are our very first interactions in the banking system. We open a savings account, we put money in, we receive some very small interest mostly because the money that in the savings account can be transferred out mostly anytime. We save for many reasons, emergency, maybe for a vacation, or even for something bigger or longer term. Savings accounts are the most liquid type of assets, almost very close to checking accounts because money can be taken out, withdrawal relatively easily. The second type of savings that we often could encounter is what we call CDs. CD stands for Certificate of Deposits. What that means is we usually put money in a savings account, except with the CD, you are not allowed to take out your money unless your CD matured, expired. What that means is it might be a month, 3 months, a year, 5, or even longer before you can take your money out. And depending on how long you keep your money, the interest rates will vary, and this usually depends on what the interest rate environment is. Now let's talk about FDIC and why is that important. FDIC is a government federal sponsored program. It's called the Federal Deposit Insurance Corporation. What this organization does is provide insurance for your money. What that means is, let's say if you put money in a bank that is considered an FDIC insured bank, if there are issues, let's say the bank has a bank run and you're not allowed to get your money, you will be insured up to $250,000 per person, per bank, per account type. This is very important to understand because you want to be able to have your money fully insured. So if you have $1 million and they are all put in the same bank, in the same account, unfortunately, you will only be able to be insured up to $250,000. So in that sense, it does require a little bit of planning. Maybe you can put your money up to $250,000 in different account types. So maybe $250,000 in savings, $200,000 in the CD. I hope this helps clarify some questions in investing, especially with learning about savings vehicles. If you have more questions, please do go to our website, send a message or leave a question, and we'll try our best to answer them.